Good afternoon, ladies and gentlemen, and welcome to today's webinar. The topic for today is individual income tax and social insurance implications for foreigners in China. For foreign invested enterprises looking to enter or are already established on the Chinese market, an understanding of the common employment and tax practice is absolutely significant. The newly adopted social insurance law, which came into effect on 1st of July 2011, and the new individual income tax law, which came into effect on the 1st of September 2011, have been designed to provide a more employee-friendly environment. As such, it is important for all companies inside and outside of China to understand their rights in terms of the new obligations in order to remain in compliance. This is also important for foreigners who are relocating to China or are already based in China, as the new social insurance law impacts them now. Prior to beginning today's webinar, I would like to briefly introduce myself. My name is Christina Kohler. I am a director of Klako Group, and our firm is a family business managed by my father, my brother, and myself. We are an international accounting and consulting firm established since 1979. We have now over 120 employees based throughout our 10 offices located in China, Hong Kong, and Singapore. The services we offer are everything from market entry consulting to incorporations, corporate compliance, accounting, tax, payroll, as well as trade services and recruitment. Our clients are normally small, medium-sized enterprises that are all looking to come into China in a cost-effective manner. For your information, we have consultants on staff that have the ability to speak German, French, Spanish, Italian, Russian, and Japanese in order to be able to speak in your own language. So let us begin with the webinar. I'm going to start off today speaking about the new social insurance law, and I would first like to provide you with a summary of what insurances are included. The main 5 types of insurances which are mandatory to be paid by foreign invested companies as well as domestic companies is the retirement pension insurance, basic medical insurance, unemployment, work-related injury, and maternity insurance. Just for your information, the maternity insurance is also required for male employees. Both the employer and the employee shall contribute to the pension, basic medical insurance, and unemployment insurance. The work-related injury and the maternity insurance should be paid by the employer only. Now, there is a lot of confusion in regards to the rates that are involved for the insurances. It is important to take note that these rates are based on the standard of living in each of the cities in China. The local governments have their own local policies in regards to what the rates should be. In the table, we've actually provided you with a range of what the rates would be depending on where the location is. To give you an example, in Shanghai, it is actually known as being the largest or has the highest standard of living, and as such has also the highest rates of social insurance. Generally, the Tier 1 cities are in the same category, and when you lead down to the Tier 2, Tier 3 cities, the insurance rates are lower. Now, according to the new social insurance law, which came into effect in July 2011, there are 3 areas which have been changed and adapted. The most important is in regards to medical claims. The Labor and Social Security Department have established a system to track and settle basic medical claims inter-region, meaning that people who pay their medical insurance in one city may gain access to the medical system in another city. This is particularly important for foreign invested companies that have branch offices located throughout China or have employees that are not actually located at the site of the office. The government is able to do this as the social insurance law has created a unified national social insurance number system. And each citizen's social insurance number is also her identification card number as well. As a consequence, this change will greatly facilitate the human mobility in China, allowing companies to locate their staff throughout China. The social pension has also become a nationwide system, with the rural pension system and the urban system becoming unified. And again, it is regardless of the employment location that someone can obtain their social pension fund. In regards to work insurance, an employer has to pay hospital food allowance, transportation, and accommodation for medical fees. The changes are relatively simple and straightforward. In effect, it just provides all employees with the mobility and the freedom to obtain their insurance no matter where they are located. The enforcement of these regulations, however, have become more stringent. And I would just like to go through the 4 points in terms of what would happen in case a company does not pay the social insurance. What it means is that the authorities could have access to the employer's deposit account. They could have the right to deduct the outstanding social security contributions directly from the employer's bank account. They have the right to require the employer to provide a warranty in case there's not enough capital on the account. And they have the right to apply to the People's Court to detain and obtain all assets related to the company. These regulations are new. This did not exist before. What it shows me is that in the previous times, prior to July 2011, companies were actually either not paying the social insurance to their employees, or in effect, they were paying it in delay. With these new regulations, they are pushing the companies to actually pay on time and pay accurately. In effect, this is actually a policy which is probably implemented everywhere in the world and is just to protect the rights of the employee. Now, the most important aspect, how does the new social insurance law affect foreigners? In effect, Article 97 stipulates that all foreign employees must now participate in the social insurance scheme. Who falls under this category? In simple terms, anybody who has a work permit in China must contribute to the social insurance scheme. In addition, foreigners who are Hong Kong, Macau, or Taiwanese citizens must also contribute to the scheme. There is a gray area in terms of foreign employees who do not have a work permit but are staying in China for more than 6 months in a year. Now, in these cases, it's very hard to track these foreign employees, but in such cases, if the foreigner is caught, they may have to contribute. Now, I would like to provide an update as recent as December, when Circular 113 was issued. What this circular states is that as of October 15th, 2011, all companies are required to register their foreign employees at the local labor bureaus. What this means is that, in effect, foreign employees only have to contribute the social insurance from October 15th onwards, not from July 2011. Now, what is the current status in certain cities throughout China? Well, in Beijing and Guangzhou, the Labor Bureau has enforced and requested that all foreign employees are registered and must start paying contribution payments. In Shanghai, there are no obligations for foreigners to contribute, and as such, foreign individuals in Shanghai have not contributed to the social insurance scheme. However, we are expecting a ruling on this very soon. In Suzhou, regulations exist, but there are no clear implementations, and hence foreigners do not need to register. In Dongguan, the local policy is that it is not compulsory for foreign staff to pay social contribution. And as such, as you can see, actually, in all cities in China, there are local policies and local regulations enforcing what foreigners must do. It is very important for the foreigner to check what the local regulations are in order to make sure that they are within the compliance. Now, I have a lot of clients asking me, what about their foreign employees from Hong Kong, Macau, and Taiwan? Well, this is also a very interesting issue. In Beijing itself, there are different regulations for different districts. To give you an example, in Chaoyang district, there is no need to register these individuals. However, in all other districts in Beijing, it is required. In Guangzhou and Shenzhen, they only need to register if they are directly employed by the local employer. If they are seconded, it is not needed. So again, as you can see, in every city, there are different regulations, and it is extremely important to check what is your situation and what needs to be done. I'm sure many of you have already heard that there are exemptions from the social insurance scheme. I would just like to point out that the only exemption is for South Korea and German nationals who have signed bilateral agreements with China with these social insurance clauses inside. What is actually included is the social pension insurance and unemployment insurance. All the other insurances must still be paid. I would like to give you an example. For a German foreigner, they can be exempt from the system on the basic pension insurance and unemployment upon application. Now, what does this mean upon application? As part of the documents which need to be submitted, you must show that he or she has participated in the German social insurance system, and all the relevant documentation associated with this must be provided. So, here are a few tips as to what we recommend you to do. 1, check your local requirements in terms of the social insurance for foreigners. Review the system carefully to make sure that you don't have to pay any penalties, or that potentially that you don't have to backtrack the social insurance to October 2011. If you act quickly and proactively, then potentially you can also negotiate lower penalties with the bureaus. And definitely monitor the situation for foreigners from Hong Kong, Macau, and Taiwan. It is a company's responsibility to make sure that their foreigners are in compliance when they are in China. And as a consequence, it is very important for your HR department to find out what are the local regulations. Now, there are many issues and doubts associated with the social insurance for foreigners. The first doubt is medical insurance and medical insurance. Number 1, medical insurance can only be provided at local hospitals. So what does this mean? All foreigners who want to get reimbursed by the medical scheme must visit a local hospital if they are sick. Now, for many foreigners, this would actually be a no. First of all, they cannot communicate in the local language, so how would they be able to communicate with the Chinese doctors? And second, it is a different type of medical practice. As a consequence, I'm sure that many expatriates would not be willing to visit local hospitals, and as such, would probably need to have a private insurance to visit foreign clinics. The second issue is the social pension. The social pension is interesting because it can only be withdrawn if the foreigner stays for a minimum of 15 years in China. Should the foreigner depart prior to this, the account would be frozen and the capital cannot be withdrawn. Should the foreigner return, the account would still be valid and the calculation would be accumulative as the time passes. If the foreigner dies, then in this case the family can inherit the pension, but obviously there has to be an application that must go through. An important aspect, what a foreigner puts in terms of social pension does not mean that they will get this amount back when they withdraw the social pension. In actual fact, even for local employees, when you are withdrawing your social pension, you do not get the full amount as to what you contributed. This is actually one of the biggest disadvantages of the social pension scheme in China. Now, as I'm sure all of you can imagine, all foreign embassies and consulates in China have been lobbying with the Chinese government as well as with the home government in order to either eliminate or adapt the social insurance scheme in order to at least provide some preferential treatment for foreigners. There is still negotiations and discussions that are going on, and as far as we can see, there have been no updates recently. An important tip for all HR managers, depending on what your situation is and where you are based, assume that, well, in actual fact, assume the worst. Assume that the social insurance will be backdated to October 15th, 2011, and as such, keep a reserve available in order to pay this once the local policies have been implemented. The next topic for today is the new individual income tax law, which took effect on September 1st, 2011. This regulation is actually applicable to both local as well as foreign employees. What are the major changes? The first is that the minimum threshold for Chinese employees has been raised to 3,500 RMB from 2,000 RMB. For foreign employees, it has remained at the 4,000 RMB range. In addition, the former 9-bracket progressive tax rate system has been replaced by a 7-bracket system with amended tax rates. And one advantage is that the IIT filing, the individual income tax filing deadline, has been extended to 15 days rather than 10 days previously. Just for standard information, IIT is filed on a monthly basis. There is also an annual filing for individuals that are earning over 120,000 RMB. This annual filing is actually to declare any other income which is being earned by the individual besides his monthly package. So this would include rental amounts received from housing, dividends, royalties, etc. Here I would like to go into details in regards to individual income tax liabilities for foreign staff. In effect, foreigners who spend less than 90 days, or for those that have double taxation agreements, 183 days in China, are not liable to pay personal income tax in China. If, however, they spend more than 183 days, which means 6 months in a calendar year, they are liable to declare income in China. If the employee is more than 1 year but less than 5 years in China, again, they actually must pay income tax based on their China salary and their overseas salary. However, this depends on how the contract is formulated, and the overseas salary can actually be avoided. If the individual is more than 5 years in China, they are liable for their worldwide income. How do you break this tax residency status? In the 5th year, the foreigner must leave China for 30 straight days and an accumulation of 90 days in the calendar year. It is very important for the foreigner to do this in the 5th year, otherwise their tax residency status would be permanent and they would be liable to pay on their worldwide income. One item regarding remuneration packages. Foreigners may receive allowances from the company. I would like to point that all allowances provided to the foreigner must be approved by the local tax bureau. The allowances can range from providing school education for children, housing allowance, car allowance, home leave allowance limited to 2 flight tickets in a calendar year, and general allowances such as meals, dry cleaning services, etc. One thing I would like to point out is that the allowance versus the base salary should be carefully monitored. Our general recommendation is that the allowance should be maximum 30% of the total compensation. And naturally, all receipts of the allowances must be provided to the company. Now here is actually the interesting part, how to structure a foreigner salary in China. There are 3 methods that can be used. The first is a compensation split. Now what does this mean? It basically means that the foreigner would be receiving compensation from 2 entities. One is the China entity and one is the foreign entity. Naturally, there must be certain benefits that the foreigner must obtain, and as such, you must carefully outline what is the allowances that are provided. An important aspect that must be considered is the fact that the responsibilities outlined in each contract must match the actual activities that the employee is doing. What does this mean? This means that the China contract, which is signed with the China entity, must state the responsibilities of what the individual is doing in China. The contract with the foreign entity must state the responsibilities that this individual is also handling with the foreign entity. As mentioned on the previous slide, the total compensation package can be outlined with the allowances, such as employee housing, motor vehicle, home leave fares, relocation, and of course, reasonable reimbursements of meals, etc. What are the key important points when discussing an employment contract with foreigners? Well, number 1, both contracts, the one with the China entity and the one with the foreign entity, must be synchronized. They must be written carefully and synchronized in terms of the content with each other. In addition, when discussing salary, you must decide whether you're discussing a net salary agreement or gross salary agreement. Who is responsible for bearing the tax liability of the individual in both locations? What allowances will be provided to the expatriate? Will allowances be provided in the China entity or will they be provided in the foreign entity? And again, key note, which I would like to repeat, all allowances, if under the China entity, must be approved by the local tax bureau. Important aspects which are according to the labor law which was issued in 2008, which must be within the China contract, is 1, the termination period, 2, the social benefits, 3, the severance package, 4, the non-competition clause, 5, the confidential clause, and as I have previously said, responsibilities. What are the responsibilities of the foreigner? The other 2 sections, the other 2 possibilities or options is declaration of the entire salary in China. What this means is that the full compensation package will be allocated to the China entity and full tax will be paid in China. This means that in their home country, They are shutting themselves down from the tax bureau. The third option is the declaration of the total salary in both China and overseas. Now, if there are double taxation treaties, then it would be possible to declare the entire salary in China, receive the tax receipts, submit them to the overseas authorities, and hopefully pay just on the difference associated with then the overseas salary. Now, in regards to option number 3, this should be definitely carefully calculated and discussed with a tax advisor from overseas to make sure that everything is in compliance in the home country. This is the end of today's presentation. I hope that it was clear and concise for you in regards to the new social insurance and the new individual income tax regulations. If you do have any questions, please do not hesitate to contact us. Sven is based in our Hong Kong office and can be reached at sven.kohler@clayco.com. And I am based in Shanghai and I can be reached at christina.kohler@clayco.com. If you have any questions, please do let us know. In addition, you can contact one of our other offices if they are located close to you, or you can refer to our archives on our website. We have actually an article written on the new social insurance and new individual income tax regulations from September 2011, and you can refer to this if you need further information. I wish you a pleasant evening, and if you would like to hear me again, I will be talking on the same subject next Friday at different time zones. Please do check the email for further information, and again, if you have any questions, please do not hesitate to contact me. I will be sending the presentation to all of you in PDF so that you will have it on hand as well. Again, thank you and goodbye.